The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 26th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we'll go check out the circumstance of these markets. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, you can send me an email, steve@tfn.com, just inside that heading. Put radio show question, and, of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 88 points at 21,702. S&P is up a point, trading at 2478. NASDAQ 100 up 11 points. She's trading at 5941. Russell 2000 back 4. Semis are up 6. New York Stock Exchange is up a couple of points. Trannies are up a couple of points. Gold is off $2. Silver off 8 pennies. And that is non-directionally correlating to the Japanese yen as we speak right now. Leading the charge here to the upside, you've got iRobot Corp up $20 or 22%. Boeing is up $17. Priceline is up 14. Biogen, that's up $13. Amazon up 10. Brinks Company, I suppose that is the the Brinks guys. Come collect your money, don't ever give it back to you. Yeah, they're up they're up $6 and change. To the downside, it's Eagle Pharmaceuticals off $15. USANA Health down 9. Ulta Beauty Salon down about 9. General Dynamics up 8. Wynn Resorts down $8, about 6% to the downside. Of course, I want to look at what you want to look at, and I'll go to the questions. We got a couple of questions that have come in. First, before the 2 o'clock Fed meeting, starts getting things rolling. If we look just to the intraday charts out here, relatively well. The ES mini. We'll start off here with the S&P. Futures contract. The S&P itself is up a point. I don't expect we'll be in this area, maybe a little bit lower. As we move into that Fed meeting here, really just kind of a double topish type pattern out here, testing the swing point from about 12:30 yesterday. So we've seen that price hasn't broken through it. That would say, hey, even pulling back into 24.72, another 3 points lower in the ES mini would be normal. Nothing wrong when that occurs out there. That's what the 30-minute chart would be communicating to you and I. The 2-hour chart out here, you'll see a price relative strength divergent pattern that formed off of this little swing point out here at about 12 in the afternoon on July the 18th. Wave counts to the upside only 6, but nonetheless, price stretched, moving higher, doing less relative energy, bearish engulfing. It was key reversal session. That too says pulling back would be normal and natural from this pattern out here. So I don't know what it is, how the market's going to respond. I can tell you going into it, though, it's giving you early signals that maybe we're going to see a bit of a pullback after Yellen does her deal out here. 5-hour chart for the ES mini, you'll see the same type of pattern, stretch pattern, price moving higher, doing less relative energy. Right now, on a 5-hour chart, that candle doesn't conclude until 2 p.m. So we've got 50 minutes out here. But that would then say, hey, pulling back to 24.71, maybe even 24.54 could be in the cards out here. And as we take a look at the daily chart, Still a bull market, folks. Just taking a look at what the intraday information is for both you and I. Do I suggest you go trade on it? No. Why would you step in front of a freight train to the upside? Now, in the case of the ES Mini, this is kind of interesting out here. Interesting for me, maybe interesting for you as well. If we take a look at the trading session of May, it looks like May 18th. When we saw the ES Mini form a bottom out here, if we start doing the wave counts from that level, then where we have been for the past couple of days is wave number 7. So you and I know that we always pay attention to those 7th waves. It may only be wave number 3, but price is moving higher, doing less relative energy as well. No bearish reversal signal just yet. And even if we do get it, what we need to see for a bit of a deeper retracement is a close below Stevie's red line. Presently, it's trading at 24.68 and change. Just use that 24.68 level. That's on the ES Mini out here. The Dow, really giving you the same kind of message information. Here you can see, now in the case of the Dow on the 30-minute chart, it did get to wave number 7. Price was moving higher, doing less relative energy. You then saw the bearish reversal signal. Folks, that is the only way that the market really communicates with you and I. I cannot stress enough how important it is to be able to see the bullish or bearish reversal signal, especially when these patterns unfold. If you take a look at the bottom on this 30-minute chart out here, this is about 11 o'clock in the morning. 11, since the 30-minute chart must have been about 11:30, and this was on July 24th. Wouldn't you like to have known about that pattern? I mean, inside the Dow, we saw the Dow move from 21,440 up into the highs of 21,680-ish or so out there. So 220-point move. Who knew? Well, the charts knew. The charts knew that price was being stretched like a rubber band in the wrong direction. As soon as the bullish reversal signal came in, that was a little bull sash, bullish engulfing style candle, that was telling you that trade on, game on. Now, the easier part of that deal was we're already in a very trending market to the upside. A little bit more difficult when you're trying to go against the trend here. The 30-minute chart just says, hey, it's just a little bit of a timeout. Nonetheless, it has the same type of topping signal that we saw here at the bottom. So we don't ignore it. And if we go take a look, and I won't step through all of the charts for you again, but I think you get the picture. The daily chart for the YM, also being stretched a bit, being stretched with less relative energy out here. And, we took a look at this yesterday, several evening star patterns that have formed over the past 6, 7, 8 candles out here. Today, if we get another bearish signal, that would be closing below yesterday's open in the 21.5. It's below 21.5, but somewhere in that range out there. That would then be saying, hey, we're going to go ahead and see some type of pullback. Now, that pullback may just be the 21,200, 21,100. And what you'll want to do is you'll want to be able to find another place to enter to the long side of the market. So that's our take going into the question. We'll see if the charts actually were providing us with a early signal as to what they want to do out there. Again, if you're not in a trade, I don't see any reason for you to go ahead and initiate one now, 45 minutes. What I want you to be able to do is anticipate, right? I'm long these markets. I'm anticipating what's going to come next out here. I won't be surprised if there's a pullback or retracement. I won't say that's the end of the bull move out here. Anticipation. It's like putting ketchup on your French fries. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and The Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade Charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we took a look at the ES. We took a look at the Dow equity futures contracts. The NQ, not so much with regard to the types of signals that we would look for up at the top, although I do believe there was a nice little TD setup 9 count that formed the actual double test of the most recent high out here. So, that alone, that we're talking about the time frame here, looks like at about 10:30 this morning. And we have seen a bit of a soft. No, if the market does pull back a little bit further, the areas that you would be watching are going to be 24.69. So I'm just going to round it to 24.69 on the ES, 59.18 on the NQ. The Dow is going to be 21.522, so it's quite a bit lower. That's 120 points from where it's trading right now. But as long as price stays above that, it's a beautiful thing. And inside the Russell 2000s, it will be 14.30. The questions from Mike from James first. James was asking about Verizon, and James had sent me an email on July the 7th looking for an entry into Verizon. So July 7th is this actual day, right? The day after this little gap to the downside out here, after we came back from that nice July 4th holiday out there. Sort of nice. Would have preferred more holiday in it. But the question was, hey, he was looking for a place to buy. Where was price headed to? Well, when you gap down into the completion of an A to B equals CD pattern, or level 1, I should say, of an A to beaking up. I'm breaking up. Hey, Steve-O, in the den, give me a high signal out there. We need to reconnect. Okay, sorry about that, Bill. Sorry. So sorry. Bummer. That's 6 minutes of nasty connection. Steve-O, maybe we should just try to reconnect now. Go for just a quick, moment of silence or something along those lines. I can't do anything until I get the high sign from the engineering department out here. But I hate to think you can't actually really hear. Talk slower. Oh, Mr. Bill. Now, if I talk any slower, I'm going to fall asleep out there. Okay, we're clear now. So here's the deal. When you move into what you see on our chart out here is an A to B equals CD to the downside. And what you really want to be paying attention to is how does price get to that first level? Because it doesn't have to be just that first level. That was just the one-to-one area. And when you gap down into, or you have a wide-ranging bar coming into a target area, it is communicating to us, hey, not so fast. I may want to go lower. And so I said to James, hey, with regard to Verizon, looks like this wants to make the 1.272 A to B equals CD to the downside, the 4091 area, and then let it get down there and then wait for a sign of strength. The reason why we took a look at a sign of strength out here, if we put this on a weekly chart, is just simply because, this thing has made a nice retracement, can easily go lower. You want to see wide price spread, accelerated volume coming off of that bottom. Well, and what James did was wrote me earlier in the day saying, looks like we've had that wide price spread, accelerated volume. Right here on July the 12th, by the way, it's a small candle, but it is a bullish reversal signal. We talked about that just a little while ago on the intraday charts and so forth. And so same rules apply. Strategy, it's great. It's the same strategy out here. Tactics are being able to identify these patterns, and a tactic is you would consider taking a long or a short trade when you get that bullish or bearish reversal signal. You want to understand your P's and Q's, really your bullish and bearish reversal candles. And they're not all reversal candles. They don't all have the same meaning out here. Nonetheless, James, we did get a confirmation with a bullish reversal signal on July the 12th. And the question is, hey, do I buy now? Do I wait for a pullback? What do I do? Now, here's the deal, James, as we take a look at this stock right now. I don't know the answer. You want to wait to see how today trades, how today plays out. Because in the case of Verizon, if it closes below 44.44 and the gap down was with volume out here of, let's go see this, volume was with 17 million shares. You're up with 10 million shares, so it looks like we're about even Steven on the volume. I don't know how the day is going to end, but if price closes below 44.44, this tells you and I that 44.44 is resistance. So then you wouldn't want to buy right now. You close above 44.44, targets will be set on the prior swing point in the 47.50th level. Now let's go turn on our market profiles, because the question was, hey, if this was a valid break, and it's not exactly the best wide price spread accelerated volume, it is certainly price spread. It is certainly somewhat accelerated volume, but it's not like a Mazda zoom, 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 or anything along those lines out here. Nonetheless, because I know you are looking to get in on this, and so I'll give you the best information. We can also see that prices run into weekly bottom of its size market profile. Thus far is a rejection, 44.68. Another number you'd like to see price close above to say, hey, maybe there's something here. Again, that something here being in the $47 area. If you're going to buy the pullback, then you get it close below 44.44 today. Pretty good chance that'll occur, and you would want to be looking at 43.71. Your stop would need to be below the low of the session from July 12th. The following day, that little bullish candle that says its source should be underneath 42.80, and I don't mean 42.79. I mean below 42.80. And if we were to close below 42.80, then what that says, James, is the 1.272 is active again. So watch 44.44, and thanks so much for writing in, being patient, and continuing to watch for that sign of strength inside Verizon. Please keep me posted. Michael wants to take a look at a ticker symbol called MTUM. Hey, how could it be bad? Tums, MTM. This is iShares EDGE USA Momentum Factor ETF. Now that was a mouthful, and this has got pretty wild volume in it. Sometimes not at all. Take the day was made. I think so. But there was only 106,000 shares out here. So don't be buying this thinking you're going to be able to exit at the price that you, in fact, want to exit at. Now, let's go take a look at this equity and see what in the Sam heck might be inside of MTUM out here. See if we can get the top 10 holdings. Momentum stocks, obviously, well, you have to type in the right ticker symbol. Otherwise, you're going to get not applicable. Okay, so the top 10, this is supposed to be the top 10 momentum stocks. JP Morgan, Bank of America, Microsoft, Apple, Comcast, United Health, Home Depot, NVIDIA, Boeing, Charter. Those 10 issues represent 41.29% of the entire ETF. There's 126 total holdings inside there. So certainly if you were trading this, you'd want to know what's going on with those top 10 holdings out here to get a better view. Now, Michael just said, just take a look at it. And Michael, we have done just that. Now, it is MTUM. It has had a healthy move off of, and it's worth, and I'm not really making fun of it or anything. It's had a nice move, certainly, off of the, since December of 2016. Just curious since January. I'm just curious. That would mean that you're now going to have to be curious, too. What kind of, let me see, is it here? Yeah, MTUM. What type of rate of change this thing has had since January 1st? The answer is 21% move. 21% rate of change. We come back from this break. Let's go see what that means. Michael might be onto something here, folks. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're looking at a ticker symbol. It's MTUM. It's the iShares Edge MSCI USA Momentum Factor ETF out there, and sent to us by one of your brothers and mine, Michael. And one of the things that we and Michael wasn't asking, should I get in, should I get out? Just take a look at it. We can see very nice performance. So, again, from a liquidity standpoint, basically poor out here. But if you were of mind that this was a long-term holding, and go take a look at the top 10 individual stocks inside that portfolio that represent 42% out there before you make your trading decision. But nonetheless, what we can see here, if you are of the opinion that the markets are moving higher, and that's going to be, I don't know how many people in that camp. I believe that's what the message of the markets is. So therefore, I am in that camp. I have a strategy that is being employed to anticipate that. And once we see some signals that say that's the wrong strategy, then we'll go ahead and make a different decision. But until then, one of the things that, I received a question. I think it came in. I responded by email because it came in after the show a few days ago, last week I believe it was. And but I did build this little chart here just simply to go ahead and send to that individual. So I'll go ahead and share it with you. And the question was, in taking a look at the S&P 500, what other factors? Just many times I'll show you divergent factors, looking for signals that the market's not confirming the move higher, the move lower, and so on. You know that deal. This chart here shows the S&P 500 takes a look at two commodities out here, one being lumber and the other being copper. And the question was, how come I don't speak about the correlations between those two commodities and the market? I guess it's because I only have an hour a day out here. But now we're speaking about it. So the top chart is the S&P 500. Line chart, meaning closing session for that day. It's a lot easier to take a look at correlation. Center portion is the lumber chart. Bottom portion is high-grade copper. Now, there is no question that the S&P 500 performs best when these two commodities are moving higher. Now, I've looked at lumber sometimes as a leading indicator for both tops and bottoms by moving it forward. I can't move it forward on this chart here for different periods of time. Let's just simply take a look at what lumber is doing right now. And we can see that it has made a 100% move of a move. That just means getting back to a swing point where we'd normally see a pullback occur. You don't have to, but it would be normal to see that. That's going back to the March 2013 timeframe. That level was hit back here in April, and there was a bit of a pullback. Now we've seen a resumption with regard to lumber futures prices, and we're looking at a weekly chart, by the way. Just easier for me to be able to show you all the data here. And if that high gets taken out, that so-called, you can't really call it a double top. The reason you can't call it a double top, you can just have to call it a retest of a previous high, if we're going to get technically correct about how we approach these things. Because a double top means that you have taken out the bottom swing point somewhere. And this has not taken out a swing point. So we just have a retest of a previous high. That's all that we have. We have 100% move so far in lumber. But if it takes it out, that would bode well for the S&P 500. Rising prices in copper should also bode well for the S&P 500. The divergences where we see that copper moves lower, which it did from February of 2011, and depending on how we want to go ahead and run these trend lines here, this secondary trend line, by the way, is just simply tying into the lumber trend line, which we can see both broke a descending trend line. In the case of copper, it's got a little bit of a longer-term trend line that is bumping up against as we speak right now. Copper breaking above that longer-term trend line would be bullish for copper. Certainly should be then bullish for the S&P 500. Lagging indicators here, but still another piece of information right now that shares with you and I that these markets want to continue to run higher. So if that is the approach out here, then we just simply have to stand up and give Michael an ovation for turning you and I on to MTUM because of the rate of change that we've seen since the beginning of the year. So if you take a look at what do I mean? Here is we'll call it the 5 primary indices that you and I can trade out here. And if we take a look at, let me make sure that I've got the right one up here. Let me just make sure. Yeah, I do. Now, this is a weekly chart as well that we're taking a look at. And what this does on a weekly basis, the very right-hand side is showing you the rate of change since the beginning of the year, since January out here. The leader in the clubhouse, you probably didn't need me to tell you this, is the semiconductor index. The rate of change since January is up 22%. Next in charge is the NDX 100. Well, this MTUM had a rate of change similar to the semiconductor, did it not? It did. Why am I asking did it not? Now, where was that chart? Let me see. I think I go, is it here? Yeah, it's here. So MTUM is at 21.28%. It means it's valid for each of us to go take a look at that area. If we're taking a look at where performance is. So to the extent that you want to go ahead and invest in performance, that's in essence what one of the things that this rate of change tool is providing for you and I. So we've got the S&P 500, copper, and lumber all moving to the upside. Those are all bullish messages for the market. So the question becomes, well, so where should you rotate into? Well, the performance inside the Russell 2000, same period of time, only about a rate of change of 5.7%. Inside of the Dow, about 8.6. Inside of the S&P, about 8.8. Now, those are nice areas, but it's not the place where you want to go ahead and put on that next trade. It was one of the reasons why subscribers and I went along the NDX 100. We believe that this has more momentum. So when I have suggested to you that over the longer haul, the NDX 100 wants to get into the 8,500 level, I'm not giving you a target date. I'm not giving you those big grandiose numbers inside of the S&P, the Dow, and the Russell 2000. The momentum, I would, if that is to come to fruition, the momentum that we see here in the NDX or the semiconductors or what we can now say is MTUM will very likely continue. There will be momentum to the upside out there. Now, I've also been spending a bunch of time just simply trying to understand. That's not it. Trying to understand where I put these different analysis out here. It wasn't that, although that's a daily. Oh, it's this chart right here. It's where I had MTUM. Hello. No, actually, you know what I did? I broke down the Russell 2000. I wonder if I've got that anywhere. I got to look. I think I do. This is Russell 2000. So for those of you that want to go into the Russell 2000, I've got something for you to consider. Why don't you consider the Russell 200? Go take a look at that ETF. That's at a 15% move versus the IWM, a 5% move off of that same January level. If you don't like that, try the Russell 1000 growth. Those are IWY and IWF. Steve Rhodes with TFNN.
Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV. Directions daily, 20-plus year, bull and bear, 3 times ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So for Phil writes in and asks TSLA, Tesla, a short here against a 50-day moving average and a bear flag out here. So, Phil, since you've already identified those patterns for yourself, let's take a look at other signals maybe to assist you with that trade. Now, this chart here that we're taking a look at, by the way, it's just the bottom panel, that rate of change, just simply taking us back to the first trading day of 2017. And we were taking a look at that momentum index, or ETF. We were just taking a look at some of the different, like the Russell 2000 growth area, really the Russell 200, the Russell 1000 growth as potential ETFs versus the Russell 2000 itself. Something to think about. Semiconductors inside as the NDX 100. Momentum moves to the upside to the extent that you are in that camp out here. Tesla is since January, and it's well off of its high. I'll say it's off of its highs in the 390 area, where from January 1st through that was 100%. Yeah, that's right. 100% move to the upside rate of change-wise. You're still at 58.8% out here. So, excuse me. What is Tesla doing? How do we help Phil out here? Is Tesla a short as we speak right now? Let's do a couple of things out here. First, let's take a look at just simply retracement levels, Mr. Phil. So we go from the high to the low. You are above the 0.382 retracement. You came through that like a hot knife on some nice cold butter, sliced right through it. That suggests that you want to at least wait to see what happens at the 354.96 area, somewhere around there, the 0.618 retracement. You're also, and you are into a gap. Let's go ahead and put volume out here. Well, I got to add that to the chart. So let's add that to the chart out here. Volume, schmolium. Come on, put it on there. Let's add volume. It's going to be down at the bottom. So, this did gap to the downside with about 17 million shares. You're only up today with about 3.5 million shares. So could be resistance, that's all. Could just be some resistance out here, but not really a sell signal, if you will. Not the ideal area. You don't have a bearish reversal signal. So, just depends on, it's probably the same odds of betting on a trifecta out there. You just don't have a signal. Is price up against a resistance zone? Absolutely. But is that a reason to sell it as we speak right now? I don't think so. Again, 347.20. Why would I say I don't think so? Let me go see Where is the red line out here? Let's take a look at, so we don't have a signal from the retracements. Let's take a look at Stevie's red line, which is at about 334.24. This chart, for some reason, again, not updating today's activity. Not sure what the heck is going on there, but we know that it's trading above 339. So you need to at least see it close below 334. When price moved back, as price was moving higher, doing less relative energy, and then you had that nice little bearish engulfing candle out here on June 27th. I need to clean these candles up. This looks disgusting out here. So let's just change that time frame because this has got some CME hours on it. I can see that right there. So let's go to regular trading hours. Just clean the chart up a bit. There we go. Looks a lot nicer. When price was pulling back, Phil, it pulled back to support, right? Stevie's red dash lines. Now, those courtesy of the Tom DeMark system out here. Nonetheless, a level of support. Then you saw the bullish reversal signal, that bearish engulfing candle out here. So I would say no signal. You do have a price oscillator, bottom panel, below zero. So if price were to get below Stevie's red line, then my answer to you would be yes. Then that would be suggesting that this could be an A to B equals CD to the downside inside of Tesla. But we don't have those messages as we speak right now. I would be leaning more towards bullish and neutral than I would towards bearish as we speak right now. But let me know how that works out for you, or right back, as this trade progresses, or as you wait for some other areas out there. Trading against the 50-day moving average out there, to me, if you were going to use that as an indicator type tool, wait for some type of bearish reversal signal. Same thing out here. Now, I don't trade off of moving averages. I do use certainly moving average work inside of our charts to go ahead and take a look at things. But that's really just looking at a oscillation between two moving averages, which really provide me with more confidence and some better information out there, which I think along the way we have both determined that, yeah, Steve-O, that actually works really well at being able to help each of us call the markets as far as whatever it is we're looking at, what in fact it wants to do out there. So, Phil, I hope that helps you out with our analysis on Tesla, TSLA. No other requests. I don't see anything else inside the Tiger's Den. So what to do with the next 2.5 minutes out here? I say, let's go take a look at the currency market. Let's look at the Japanese yen. Let's go look at the cross pair out here. And inside the currency pair, what do we got? Yesterday was a bullish morning star pattern out here. And this was at the 0.618 retracement. Now, this could potentially be boding poorly for T-bonds. I mean, that's its message as we speak right now, as well as for gold. So if in fact the yen is the leading signal as to when this chart goes higher, okay, when it's going higher, the yen is getting weaker. And here's what we know about this chart. What we know about this chart is it's got a lot of stuff on it that I just need to turn off for the moment out here. Let's turn off that retracement level, depending on how you want to call it. So here's what we know about the yen currency pair. When it made its 100% move, a retest of a prior swing point. See, it's not a double top. Never broke through the prior swing back here April 17th. It was just a retest. And when it did that retest, it gave us a bearish reversal signal right here. Small little bearish engulfing, but it was also a key reversal day. That said price wanted to move lower. Well, move lower to where? Just like Phil and I did in taking a look at retracements, this is an excellent tool to try to identify price targets. Well, in the case here, remember the body of the candle is truly the essence of price. These wicks, upper lower shadows out here, nothing more than an extreme emotion, a little temper tantrum that's going on during that session out here. And if we take a look at where the candle opened and closed, the 0.618 retracement 110.99 was a beautiful thing out here. That alone was not any type of bullish reversal signal out here. But yesterday was. That candle, that wide-ranging bar, gave you that three-river morning star, courtesy of Oda Nobunaga out here. Now that says this could be a bottom. And if this is a bottom, and if the correlation is going to be maintained, this could be an A to B equals CD to the upside, or at least another retest of a prior swing point that is resistance in that 114, 49-ish type area out here. We don't know which one it is, but this could be an advanced warning signal that gold is going to pull back. That would go ahead and send those mining equities to the down, or should, to the downside. And this would also go ahead and continue to send bonds to the downside. Now, I like you, and I also like the TAS market profiles when it comes to the futures contracts for the yen out here, just providing us, for me at least, providing us with a better visibility as to what the market is doing. So when we get back from this break, unless there's a question or a call, we'll go take a look at yen futures, see if we can glean out any information.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Looks like I missed a couple of requests out here. My apologies. Let's go to those first. One was about Hasbro, I believe, HAS. I'm looking for a long entry in the Hasbro. Any thoughts? Well, after that move to the downside yesterday, or not yesterday, 2 days ago, with 5.7 million shares out here, this says wait until this thing comes back towards its sign of strength out here. And that's what I would do, at least. That is giving you a price range here. We're just going to go ahead and put it in between 99.68, 96.52. That might be an area for you to take a look at. But that wide-ranging bar, this looks like it wants further moves to the downside out here. It's trading below the weekly profile, so that's not good out here yet. I think you need to just sit tight on Hasbro. The next one was IBM. If we go take a look at IBM, this thing also gapped to the downside a couple of days ago with pretty good volume. Where is IBM headed to? The weekly chart, I seem to recall there being a gap. I thought there was a gap. I don't see that gap. That's an interesting sound inside my ear. I don't know where that is coming from. But at this stage here, it looks like what IBM is doing. Well, let me pull this over here. It looks like IBM is going to try to get down into this 142.50 level. That doesn't mean that's where I would go ahead and put a buy order in, but it looks like that is where it is headed to. If I punch up weekly profiles, no good there. Daily profiles, no good there, so no levels of identified support in that area. If we look at just simply retracements now from low to high out here, well, it would be best if I could actually grab the proper swing point low to do that with. It's got the 0.618 at about the 141.96. So comment on IBM, continued weakness, possible targets. Yeah, just go for those next levels out there. 141.96, below that, and then you're back into the 130.94-ish type range out there. So now I think I completed all of the requests out there. And if I did and you're inside the den, because my little den window is kind of small, would you just repost it for me? And I'll be happy to get to it in the next minute and 30 seconds out there. I'm going to just check, make sure there's no other requests by email out there. I don't see it. So back to the yen. Again, just looking for early signals here. Are these markets, are there some tells inside the markets out here? Inside the yen, the answer is not really. I know what the daily chart communicated to us yesterday. It says that the yen currency pair wants to go ahead and trade higher. And inside the futures, it is telling us what the yen wants to do is move down to 88.73. We'll see if that comes to fruition. But if it does, expect to see gold trade lower, bonds trade lower as well out there. And if that doesn't come to fruition, then that's not what you will see out there. So only time will tell. We just have about 3 or 4 minutes to go before we have at least the first indication as to what's going on. There is a workshop tonight hosted by your friend and mine, David White, your favorite polar bear and mine. I cannot give a higher recommendation to each of you up there to attend that, whether it's live or be able to get the archive of that. It's going to be extraordinary. I'm certain of it. The knowledge that David has is, he's amazing with regard to the way his mind operates and his knowledge. And I would say, I'm reading a book. It's an amazing book out here. It's not totally along the lines of what he's going to be talking about, but it goes hand in hand with it. And so please come on over to the homepage at TFNN.com. Sign up for that. And tomorrow, you and I will just go ahead and talk about how the markets responded to whatever it is the Fed decided to do. Take care, folks. We'll see you on Terrific Thursday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.